Welcome to today's exciting video about cryptocurrencies. They have emerged as a major player in the financial industry over the last few years, with Bitcoin taking the lead as the world's first decentralized digital currency. While there have been ups and downs, the future of cryptocurrency seems bright as more individuals and institutions begin to embrace it. As an expert in finance, investing in cryptocurrencies, I can provide valuable insights into the predictions and trends for the future of cryptocurrency. However, I must emphasize that I am not a financial advisor and that investing in cryptocurrency, like any other investment, comes with risks. It is important for individuals to do their own research and exercise caution when investing in cryptocurrency. However, there are some key points individuals should consider when discussing the future of cryptocurrency. By studying these key points in depth, individuals can better understand the future of cryptocurrency and make informed decisions when it comes to investing in this exciting and rapidly evolving industry. Cryptocurrencies have the potential to establish themselves as a means of payment in the future. In fact, we are already seeing a growing number of businesses and individuals accepting cryptocurrency as a form of payment. One of the main reasons for this is the increasing ease and security of cryptocurrency transactions. With no intermediaries involved, transactions can be completed quickly and securely without the need for banks or other financial institutions. Another reason for the potential mainstream adoption of cryptocurrencies is growing dissatisfaction with traditional banking systems. Frustrated by the high fees and slow transaction times associated with traditional banks, many people see cryptocurrency as a viable alternative. Additionally, the rise of decentralized finance, DeFi, continues to drive cryptocurrency adoption. DeFi allows individuals to access financial services without the need for intermediaries, offering greater financial freedom and independence. However, for cryptocurrency to truly become mainstream, there are still a few hurdles to overcome. One of the biggest challenges is the issue of volatility. Cryptocurrency prices can fluctuate wildly over short periods of time, making them difficult to use as a stable means of payment. Additionally, there is still a lack of understanding and awareness of cryptocurrencies, especially among older generations who may be less tech-savvy. Therefore, education and awareness campaigns are crucial to encourage wider adoption of cryptocurrency. In summary, while there are still challenges to be overcome, the potential for cryptocurrencies to become a widely accepted form of payment is definitely there. As more businesses and individuals begin to adopt cryptocurrency, it is becoming more mainstream. For those interested in investing in cryptocurrency, it is important to stay informed about this rapidly evolving industry. If you want more helpful information, you can subscribe to our channel and like this video for more informative content. Government regulation can have a significant impact on the cryptocurrency market. While cryptocurrency was originally designed to be decentralized and independent of government control, governments around the world are now starting to take notice of the potential of cryptocurrency and are implementing regulations to govern its use. One of the main impacts of government regulation on the cryptocurrency market is increased stability. By providing a clear regulatory framework for cryptocurrency, governments can help to reduce volatility and make the market more predictable for investors. This can also help to increase consumer confidence in cryptocurrency, as they can be assured that there are safeguards in place to protect their investments. However, government regulation can also have some negative impacts on the cryptocurrency market. Excessive or overly restrictive regulation can stifle innovation and growth, and make it more difficult for new players to enter the market. It can also reduce the privacy and anonymity that is one of the main attractions of cryptocurrency. Overall, it is important to strike a balance between regulation and innovation in the cryptocurrency market. Governments should work to create a regulatory framework that promotes growth and innovation, while also providing safeguards for investors and consumers. For individuals interested in investing in cryptocurrency, it is important to stay informed about government regulations and how they may impact the market. By keeping abreast of regulatory changes, investors can make more informed decisions about their investments and be better prepared for any potential impacts. In conclusion, government regulation can have a significant impact on the cryptocurrency market. While it can provide stability and consumer protection, it can also stifle innovation and reduce privacy. As the cryptocurrency market continues to evolve, it is important for governments to strike a balance between regulation and innovation to ensure that the market can continue to grow and thrive. the emergence of new cryptocurrencies is a constantly evolving and exciting aspect of the cryptocurrency market. New cryptocurrencies are being created all the time, with each one offering its own unique set of features and benefits. These new cryptocurrencies have the potential to disrupt the market by offering investors and consumers new and innovative ways to participate in the cryptocurrency ecosystem. Some new cryptocurrencies are designed to be more environmentally friendly, while others are focused on providing greater privacy and anonymity. Still, others are designed to be faster and more efficient than existing cryptocurrencies. By offering these new features and benefits, these cryptocurrencies have the potential to disrupt the market and change the way that people invest in and use cryptocurrency. For investors interested in exploring new cryptocurrencies, it is important to do your research and be cautious. Many new cryptocurrencies are untested and may not be backed by the same level of security and stability as established cryptocurrencies like Bitcoin and Ethereum. Therefore, it is important to proceed with caution and only invest what you can afford to lose. Overall, the emergence of new cryptocurrencies is an exciting development in the cryptocurrency market. By offering new features and benefits, these cryptocurrencies have the potential to disrupt the market and change the way that people invest in and use cryptocurrency. However, investors should proceed with caution and do their research before investing in new and untested cryptocurrencies. Blockchain technology is the foundation of cryptocurrency, and its role in the future of the industry cannot be overstated. The blockchain is a decentralized ledger that allows for secure and transparent transactions without the need for intermediaries like banks or financial institutions. This makes it a perfect fit for the decentralized and independent nature of cryptocurrency. The blockchain has numerous applications beyond cryptocurrency as well. It has the potential to revolutionize industries like finance, supply chain management, and even voting. Its decentralized and secure nature makes it ideal for any industry that requires transparency, security, and efficiency. As the cryptocurrency market continues to evolve, the role of blockchain technology will only become more important. New and innovative use cases for the blockchain are being developed all the time, and it is clear that this technology has the potential to disrupt numerous industries in the future. For individuals interested in investing in cryptocurrency, it is important to understand the role of blockchain technology in the industry. By understanding how the blockchain works and its potential applications beyond cryptocurrency, investors can make more informed decisions about their investments and be better prepared for the future of the industry. One of the potential impacts of cryptocurrency is its ability to replace traditional banking systems. Cryptocurrency offers a decentralized and independent alternative to traditional banking, allowing individuals to take control of their finances and bypass the need for banks or other financial institutions. Cryptocurrency transactions can be completed quickly and securely without the need for intermediaries, reducing the fees and transaction times associated with traditional banking. Moreover, the use of blockchain technology provides a level of security and transparency that is not available in traditional banking systems. While it is still early days for cryptocurrency and its potential to replace traditional banking systems, there is no doubt that it has the potential to disrupt the industry. As more and more individuals and businesses begin to adopt cryptocurrency, the need for traditional banking systems may begin to decline. For individuals interested in exploring cryptocurrency as an alternative to traditional banking, it is important to proceed with caution and do your research. While cryptocurrency offers many benefits, it is still a relatively new and untested technology. Therefore, it is important to only invest what you can afford to lose and to stay informed about the latest developments in the industry. Overall, the potential for cryptocurrency to replace traditional banking systems is an exciting development in the industry. While it is still early days, the decentralized and independent nature of cryptocurrency offers many benefits over traditional banking systems. As cryptocurrency mining has grown in popularity, there have been increasing concerns about the environmental impact of the process. Cryptocurrency mining requires vast amounts of energy, with estimates suggesting that the energy consumed by Bitcoin mining alone is equivalent to the entire energy consumption of countries like Argentina or Norway. The environmental impact of cryptocurrency mining is significant, with many experts warning that it is unsustainable in the long term. However, there are also efforts underway to address these concerns. Some cryptocurrencies are designed to be more energy efficient, while others are exploring alternative mining methods like proof of stake instead of proof of work. Moreover, there are initiatives aimed at promoting more sustainable energy sources for cryptocurrency mining. For example, some companies are exploring the use of renewable energy sources like solar or wind power for mining operations. Overall, the impact of environmental concerns on the future of cryptocurrency mining is significant. While the current energy consumption of cryptocurrency mining is unsustainable, there are efforts underway to address these concerns and promote more sustainable mining practices. As the industry continues to evolve, it will be important for investors to stay informed about these developments and make informed decisions about their investments. Cryptocurrency has the potential to become a safe haven asset in times of economic uncertainty. When traditional financial markets experience volatility or instability, investors often turn to safe haven assets like gold or U.S. Treasury bonds. Cryptocurrency, with its decentralized and independent nature, offers a potential alternative to these traditional safe haven assets. Moreover, cryptocurrency has shown its resilience in times of economic uncertainty. For example, during the COVID-19 pandemic, many cryptocurrencies saw their value increase while traditional markets experienced significant losses. However, it is important to note that cryptocurrency is still a relatively new and untested asset class. Therefore, it is important for investors to proceed with caution and only invest what they can afford to lose. Overall, the future of cryptocurrency is full of potential and possibilities. From its potential to disrupt traditional banking systems to its ability to become a safe haven asset in times of economic uncertainty, cryptocurrency offers numerous benefits to investors and consumers. As the industry continues to evolve, it will be important for investors to stay informed and make informed decisions about their investments. In conclusion, cryptocurrency is an exciting and rapidly evolving industry with numerous potential applications and benefits. By understanding the trends and developments in the industry, investors can make informed decisions and potentially profit from this exciting new asset class. Thank you for watching, and I hope this video has been informative and helpful.